We have so many options when it comes to the ways we can spend our money, and they're definitely not all good for us.
I would argue that it's not that the knowledge is inaccessible. It's more of like information paralysis.
That's Nate, and this is Money Questions.
That's Matt. This is Money Questions.
Money Questions will answer questions without a sales pitch.
Confidence, clarity, and some tools to make some important decisions.
This is season 2 of Money Questions.
It's wherever you get your podcasts.
Hello and welcome to Money Questions. That is Nathan and I am Matthew.
This month on Money Questions,
Yes.
we're going to cover a tax episode because tis the season.
It is.
But we're going to put a little twist on it and maybe sort of dive down into sort of like the brown envelope anxiety of it all and try to make it less stressful because it's a stressful time of year.
It is for a number of different reasons, and we're going to touch on all of those reasons, or most of those reasons, and maybe talk about some frameworks and some strategies for kind of taking the pin out of the big balloon that carries all that stress at tax season.
No, I think that's very appropriate because, like, as I'm sure everyone knows, Canadian tax filing season has opened up for the 2025 tax year. And this is where everyone frantically tries to get something electronically filed for the most part by April 30th.
That's it. For April 30th for most.
Yes.
For our self-employed comrades.
I think it's June 15th.
You're right. It's June 15th.
Something along those lines.
That's right. And so the floodgates have recently just opened in mid-February or so. The CRA opens their portals to receive returns.
Yes.
And inevitably, the third week of February, we get a few eager folks coming to us hoping to file their tax returns.
Yeah. It's almost like this episode is like by special request by how much our phone rings for people looking for T-slips.
Mm-hmm. Mm-hmm. And there's a few reasons I think that happens early because I don't know about you, Nathan, but I am the type of person that can be guilty of sometimes trying to push aside the things that I don't want to think about.
Yeah.
Right? And delay them because I can be a procrastinator.
Yeah. And taxes are complicated. It's not an easy thing typically to navigate. There are a lot of things that can de-stress it, of course. So what I thought we would do is just sort of briefly talk about what shows up in your mailbox in a brown envelope, what those certain things mean, and then we'll dive into what is the CRA online portal that everyone's telling me to sign up to and why is it beneficial. We got some tips and tricks and things to make your life easier, and then we'll sort of wrap it all up with a so what and why it matters when it comes to financial well-being and financial planning.
Absolutely. Maybe before, just as a primer, before we get into brown envelopes, the one thing that comes up fairly regularly with clients and friends and family is in regards to tax rates, tax brackets. I've heard on countless occasions people that are concerned about their income going above a certain threshold because they're concerned that they will enter a new tax threshold.
Right.
And what it means, how our tax system is tiered. Just very basic 101.
Very basic 101. So in Canada, personally, there are different tax rates based on different brackets of income, federally and provincially.
Right.
So federally, you can make so much money and paying no tax, and then you're jumping into various tax brackets. And as you make more money, the taxes paid progressively increases. Same here with the province of Nova Scotia or any other sort of province in Canada. In Nova Scotia, when you jam both the federal and provincial rates together, the highest one's 54%. So you're paying more tax than you are making. That's a podcast for another time. So, but
maybe on the opposite end of that spectrum, there is a certain amount of money that you can make without paying any taxes as well.
Yes.
And so, like, perhaps just to touch on what, just give us a feel of what those brackets look like. So,
But $15,000 to $20,000 is very minimal taxes payable.
right.
But the most important thing there is it's all broken down on a notice of assessment.
Fair enough.
So like typically like the early part of the year, sort of in our financial planning office, we spend some time looking at last year's notice of assessment from 2024.
Mm-hmm.
And then we're having a lot of conversations of sort of what happened within said household for various different types of incomes. Like, was it the same? Was it different? And as well as like, do we have any additional credits we can claim in future years?
Mm-hmm.
I find sort of within financial planning, there's a lot of value to be added with tax planning.
Absolutely.
Yeah.
Yeah. I mean, I used to work at a large financial institution. They had a tax and estate department.
Yeah.
They had some wonderful presenters. Shout out to Carol Bazaire.
Mm-hmm.
But she would often start her presentations by surveying an audience and asking them what their largest expense was on an annual basis.
Yeah. And that was just in the back of my head too.
Yeah, yeah. So if you ask nearly anybody that question,
Mm-hmm.
it's rare that they will say taxes.
They'll say their mortgage. They'll say their car payment.
Right.
They'll say their children.
All the while, about 30 to 40% of their income is going to the CRA.
Yes.
Right, and there's no larger expense for any Canadian, working above the table than Canadian taxes. But just to dig in a little bit more to our tiered tax system, just to kind of provide some color around that before we dive in a little further.
Yeah.
Tiered means that on the first 15 to 20,000, you may pay $0 in taxes.
Yep.
So $0 in taxes on the first 15 to 20. We're not being exact here. There's tables.
Yep.
You can Google, provincial, federal tax brackets.
All the major accounting firms have really good cheat sheets.
Right.
We use them in the office.
And so for the next bracket, we'll say from, $20,000 to $40,000, you're going to pay in and around 15%. The next tax bracket, let's say between, 50 something and 70 something, you're going to pay 17 to 23%.
Yeah.
And so it becomes complicated really quickly because you're paying an aggregate of all those blended rates. It's not as if as soon as you earn more than $57,600, you're paying 23% back to $1.
Yeah.
You're paying nothing on the first chunk, a little more on the second chunk, and even more on the third chunk. So I just want to clear the air with that, just because I'll hear people say, I don't want to earn that much because then I'll be in a different tax bracket. Well, if you earn $500 in that different tax bracket, it's really not going to have a large impact on your overall tax bill.
Yeah. And that notice of assessment you get after filing your taxes, it's fairly easy to calculate your average tax rate. So like how much do you pay in taxes on every dollar?
Right.
Is it, I don't know, we see a lot of retirees, they pay 10 cents on every dollar.
Yeah, that's a good jargon alert right there, Nathan, because there's average tax rate, there's marginal tax rate.
Yeah.
So what are we talking about when we say that?
Average tax rate is when you sort of mush all those tiers together. What's the average? The marginal tax rate is the highest tax rate that your taxable income touches.
There you go.
Yeah.
There you go. Right on. Right on. I think that's just a very common misconception. I wanted to make sure that we kind of touched on it.
Yeah.
A lot of this information shows up to us in brown envelopes.
It's true.
And Canada Revenue Agency is often on those envelopes. And if it's not a check, people get freaked out.
This is true. And we were just out to lunch with another colleague, and his rule of thumb is never open a brown envelope on a Friday because it ruins your weekend.
Yeah, unless you can really tell it's a check. Yeah.
But typically, if you're not signed up for any sort of online correspondence with the government,
Which you should be.
yes, you're getting notices of assessment after you file your tax return. So that's just a summary of what happened in the previous year. You're also getting installment reminders. So for folks with various sources of income, sometimes they don't have enough tax withheld throughout the year. CRA says taxes are owed when the income is earned. So for some people, they shake you down every 3 months for an installment payment.
And as a rule of thumb, if you owe more than $3,000 at tax time, as a rule of thumb, CRA will look at you for installments for the next year.
Correct. You will get the letter, and it's always important to sit down with an accounting or financial professional to see if that tax year is going to be the same going forward, or is it going to be less or more going forward, and then figuring out what installment payments actually need to be made.
The funny thing with installments is if it turns out that you won't owe that amount of money at the end of the year, you don't need to pay the installment.
Correct.
However, if it turns out that you will owe that amount of money and you did not pay the installment, they will charge you interest if you don't pay it. So it's a bit of a funky spot to be in because you could choose not to pay the installment. But if it turns out you do owe that money at the end of the year, they will charge you on interest for not paying the installment. If it turns out you didn't owe that money, there's no interest to be paid on the installment.
So a little bit of napkin math can figure that out in a hurry.
Right.
Talking to the right professional there. Other things you get in brown envelopes are benefits updates. Like, hey, my Canada pension has been indexed and changed. My old age security has been adjusted for various reasons. The other letters that you get typically have the ones I care the most about are the ones that have a 30-day timeline request. And it's usually sort of a request for documentation. When an individual opens these, they're like, I'm being audited. Really, it's just a review or sort of confirmation of documents because CRA is like the provider of those slips. Like we don't have those slips that you submitted, so we have more questions. Right. So before they finalize your tax return, they're doing a little bit more due diligence. And then you'll also receive reassessments throughout the year as well. So if an employer or an investment company or like if a slip wasn't provided and you didn't have it when you filed your taxes and it gets sent in 6 months after the fact, those tend to pop up and they get added into your actual taxable income for that year. So it's all case by case, and typically what we do is explain the letter.
Right. Yeah.
Where did this come from and why did it occur and why does it matter? Because with all these moving pieces, it's really valuable sort of within the context of financial planning.
Yeah, and a lot of these institutions speak their own language. And over the years, we've become adept at translating that language to everyday people talk, right? Because they don't speak everyday people talk.
Yeah.
And I think often it can help that we interpret the letter for them.
Yeah.
Because sometimes the CRA is looking for additional information. We may not even know what they're looking for, but we can help determine what exactly they're looking to provide. One client that I had received a notice of assessment. She got the brown envelope. A lot of people just get stressed out when they see the brown envelope. Yep. But, to your point earlier, she had received a slip late. It was a T3 or a T5. It was some interest income or some Canadian dividends. And the slip was issued a little late. And in all fairness, last year, CRA's uploading tool for institutions to upload these slips was not working properly, causing a lot of problems. And so this slip was late, and so she was reassessed. And it turned out that she owed $6 more on her tax return than she had paid, right? And so it wasn't necessarily a big deal, but just the arrival of that letter caused a lot of anxiety.
Absolutely.
Yeah.
So one way to avoid all those brown envelopes is using CRA's online client portal and service. I really advocate for this because there's a lot of times where you lose letters. You're trying to articulate something that is on your kitchen table while you're in sort of a professional's office. It's a lot easier to pull that letter up on an online profile as well as give professionals access that have CRA credentials to view sort of what's going on over the years within your tax history.
Yeah, absolutely. And I would say that whomever it is that helps you with your taxes will be grateful that you have online access.
Yes.
Because one of the things that a lot of professionals in finance and accounting can do is become an authorized representative for you.
Yes.
And so they can gain access to your CRA online account and
To view or make changes or delegate access.
Right. And so if you call them and you've got a letter, they can literally pull up the same letter and look at it with you.
And have a conversation with you as to what it is and why it does or does not matter. CRA's online client portal is incredibly powerful because it gives 10 years worth of history as tax filings. It gives your contribution room available for various benefits like your registered retirement savings plan room available to contribute to a tax-free savings account. It lets you know if you're eligible for the disability tax credit for a year or multiple years, as well as do you owe them money or are you square?
Right.
Or do you owe any other government programs money, or are you good? It's like Service Canada plugs into CRA, and there's a bunch of other ones as well. Student loans.
Beautiful. Now, there's a few caveats in there maybe. The one area where CRA has potentially fallen short, please save me from the wrath of the CRA for saying that.
Yes.
But like the TFSA reporting may leave something to be desired for some.
Yeah.
They update it in May of every year, right? And that's not really a typical timeline for people to be kind of caught up and up to date is May after tax season. So, that the May update won't capture anything between June and December of that calendar year. And so you have to be careful sometimes utilizing the totals they're giving you. And that's, again, where a financial professional can kind of help you to parse through what they're giving you and ensure that you're doing things correctly.
Yeah. A 1% per month penalty sucks on a tax-free savings account. So it's very important to run a report as to what CRA knows versus what actually happened in the financial institution that you're investing or savings with.
Because there's a big red warning saying, essentially, don't trust this number. It could be wrong.
Right.
And the other problem, I suppose, is that if you do something like over-contribute to a TFSA, it could be 8 months before they notify you. And at 1% a month, an over-contribution of $1,000 can, and the penalty of 1% a month on $1,000 can add up, right? And so it's important to, keep track of these numbers on your own and not lean too heavily on the CRAs.
So let's pivot here. Let's talk about tax filing being very prompt in your filing and associated refunds. I found like over my career, there's a certain set of individuals that are very, very prompt in their tax filing because they are expecting a refund. Which is fine, but more often than not, a tax return is getting filed without all the correct information, which leads to a lot of silly reassessment letters and adjustments required, and just makes a lot of work and confusion that's completely unnecessary. I think it all stems down to using a tax refund as a savings vehicle,
right?
If that makes sense.
It totally makes sense, yeah.
Yeah.
Yeah, and the question I would ask people is, if the Canada Revenue Agency knocked on your door and said to you, we know you have options in regards to where you can save money and potentially even earn interest on that money. But instead of doing that, we would suggest that you save that money with us. We're not going to pay you any interest. We'll just give you your money back a year later. What would your answer be to CRA? And I think most people would say, oh, to hell with them. Like, why would I save it with CRA? But that's essentially what's happening with some people. It's almost as though they overpay intentionally just so that they can have a return at the end of the year.
There's a lot of individuals out there that have an extra $50 a pay going towards income tax or very larger numbers, of course. Because they're using it as a savings vehicle, because they're using the refunds to pay for the winter's home heating oil, property taxes, vacations, you name it. They're using it as a bit of a out of sight, out of mind budgeting tool.
Yeah, and saving is good. We're never against savings, but our question would be, would you give the CRA an interest-free loan? And I think most people would say, well, no, I
Yeah.
wouldn't do that.
Yeah. So that translates back into knowing your tax situation and sort of what happened in the previous year, like prior to filing, or like doing some good tax planning to know like how close can you get to a $0 refund? Because that means you withheld or you paid in like enough income taxes throughout the year to satisfy CRA, and they'll leave you alone. And then you're getting the appropriate money in your bank account to allocate to like
Investment accounts or whatever, right?
emergencies,
Yes.
budgeting, vacations, midterm, long-term savings, all that stuff.
Right.
Yeah.
Yeah. So just to reiterate there,
It's better in your pocket than CRAs.
absolutely, absolutely. And perfect would be a $0 return, and it's almost never happens, but as close to zero as possible is generally what we're aiming for with clients that have a decent plan in place.
Yeah. So let's sort of jump into another topic here. Like taxes are owed when income is earned in relation to like self-employed people.
Yeah.
That sort of ties into like the conversation we just had about installments and how installments are important because if not, they're going to charge you interest. And on top of that, you'll have a very large bill come April 30th when it's due, even though you don't have to file your taxes till June 15th. And one thing I just wanted to point out and sort of capture is a lot of self-employed folks don't budget for Canada Pension Plan contributions.
Right.
It's missed because these are sort of things that are withheld and dealt with like on their pay stub. However, when you're a self-employed person, you're responsible for the employee and the employer contributions into the Canada Pension Plan.
Right. So just to wheel that back for a second, if you're an employee with an employer, typically you're both paying into CPP, Canada Pension Plan. But as a self-employed individual, you're obligated to pay for both sides of that.
Yeah. And that's collected on your annual tax filing.
Right.
And that shows up on your notice of assessment of like you'll see federal tax, provincial tax, Canada Pension Plan contributions. And that usually equals a big scary number to a self-employed person, which results in them hiding in the sand and delaying filing and incurring interest and penalties for late filing. So it's important to understand those obligations as you go through the year in order to plan for the taxes that need to be paid on your taxable income.
Yeah, and as someone that has found themselves behind in their taxes, I can tell you that, if you do owe the CRA more money than you can pay them at once, the worst thing that you can do is not call them, right? Because they can be quite reasonable about money that you owe them.
Yes.
As long as you talk to them.
That's right.
If you force them to chase you down, they become less reasonable because they send out folks that are a little more aggressive to folks that aren't proactively dealing with them.
Oh, collections officers.
Yeah, right.
And when they have your banking in file or they know who you
work for,
or where you bank, they do have the legal authority to garnish your accounts.
And lock down your bank accounts.
Yes. And that usually prompts you to call them back.
So they will use that power. And it's best not to force them to do that. So I think the best thing you can do if you have a big tax bill is you'll have someone that's assigned to you as a case. You are now a case. And they'll work with you to ensure that you can pay that back. With that said, they want you to pay it back within 12 months.
Yes.
And so if you can do that with them and come up with a plan, they're going to send you that plan in writing and ensure you get it done.
Yeah. And if you're unable to make that commitment over 12 months, then you go down to it's called full financial disclosure. So you're opening up all your financials to the government, and it's on you to determine what you can and can't afford.
Yeah. It's uncomfortable.
It's very intrusive. It's very intrusive.
Yeah. Yeah.
And
No.
we try to avoid that with clients.
Absolutely.
Whenever possible.
Absolutely. Well, the other things that people can forget about too are, to your point, like in your document here, you talked about tips, side hustles, crypto, rental income, right? If you are renting a space to someone and not declaring it as income, you're evading taxes.
Yes, it shows up on a T776 on a personal tax return, and needs to be disclosed.
Yeah.
So like just because you didn't get a slip doesn't absolve you from the obligation for declaring said income. That's sort of where we wanted to get at there. How do we pay the government less money?
I mean, this is the question we're always asking ourselves. It's, how do we give them less? How do we ensure they get less upon our death? How do we ensure they get less of our paychecks so that we can have it working for us, right?
Yeah. And I think the best way is just understanding your tax situation throughout the year.
Yeah.
And knowing your obligations and using tools available to you to like reduce your taxes payable. So like some of those tools are like making contributions to like employer pensions, employee RRSPs, personal RRSPs, taking advantage if you're a young Canadian with like the first time home buyers plan or whatever that's called now. Keeping good records on your medical expenses because like dental, optometry.
Even if you have to drive far to the hospital.
Medical travel expenses, right?
If your kids are in camps or your kids are being cared for at an after school program, like all of these things can reduce your taxes payable.
Yeah. So it's always good to like chat with a tax professional as to like what are some of my deductions available to me, and the government's been pretty good at every year producing sort of an up-to-date like PDF document of like what's changed, what are current deductions and new deductions for each individual province. It's worth the read, and if you're looking for a way to fall asleep, it's a couple pages long, but yeah, it's helpful.
Yeah, like just as a small example, like in certain provinces, you can write off massage therapy. Nova Scotia, you cannot.
I know, my back hurts.
Right? Physiotherapy, on the other hand, you can write off.
Yeah.
Like there's little intricacies, and it's all available to us, but you don't know what you don't know. And that's why it can be really important to engage a professional at times, or at least take interest and do the work necessary to educate yourself.
Yeah.
Yeah.
And like a big thing is staying organized. Like there's lots of checklists available, either through TurboTax, Simple Tax, various other tax filing or professional tax services. That helps you get ready and get all the relevant documentation in one place to like either sit down yourself and prepare your return, or drop off a complete package so that it can be prepared and filed in a timely manner.
You don't like receiving one slip a week for 6 weeks?
It confuses me.
Yeah, fair enough.
Yeah.
Fair enough. So the ways to stay organized, right? So yeah, create a file, use a checklist.
Yeah. A lot of people just take pictures of important documents and save them in a photo album in their Google or
I like that.
Apple Photos, right?
Yeah, that's perfect.
Yeah. Use Google Drive, use Dropbox. You like just
It doesn't need to be fancy.
Yeah. A Sobeys bag is okay. I prefer like sort of the zippy folders.
Fair enough.
With really inappropriate things wrote in the little white or the clear window in them.
Yeah. I think I have heard you say if you hand me a Sobeys bags of receipts, there's an hourly fee for inputting that said information.
Yeah.
And I'll be watching TV while I do it.
I have said that.
Yeah.
That's just to discourage unnecessary administration and data entry work.
Fair enough. Fair enough. So I don't know. It's part and parcel with your financial well-being to stay on top of your taxes.
Yeah.
You can't be financially healthy. You can't be in a financially healthy state if your taxes aren't being addressed or considered.
Yeah. And I'm sure there's just sort of the question out there now is like, how do I do tax planning when I don't have my T4 from 2025? Got a pay stub. It's a summary of what happened that year.
Yeah, your year-end pay stub is very valuable, right?
Yeah. All the numbers on that year-end pay stub are used to create the T4 for your employment income. So you can take those numbers and get a really good idea of what your tax return looks like, as well as your other various sources of income or deductions in your household. So in January and February, it lets you figure out hey, am I going to have a big bill? Like, do I have to, is it wise for me to make an RRSP contribution? Like, how much does that save me in taxes from a dollar percentage? Like, it helps you know what tax bracket you're in at that marginal rate. Like, what's the highest tax bracket you're in? Those are the things that helps you determine what you owe to the government, and then from there do some really good household budgeting for the following year as to what you're delegating for the emergencies, the fun stuff, and your future self.
Totally. Yeah. And I would say for more than a few clients, we would both receive their year-end pay stub and draft a mock tax return, if you will, because we typically don't have all of the information, but we have enough to determine what their tax situation looks like before the end of February, which is the deadline typically to make an RSP contribution.
Yeah.
The RSP contribution effectively reduces your taxes payable because the amount that you contribute reduces the amount that you are essentially reporting as income. And so any taxes payable on that income will disappear with the RSP contribution.
Yeah. I think we'll end on this, but and my wife's going to hate me for saying this, but I sort of like tax season. Everyone has to do it. Everyone has to file. Clients can't hide from us, and we get a lot of valuable data in order to pull that into a financial plan and offer really good advice.
I don't think there's very many clients that have been in our office whose notice of assessments we haven't laid eyes on.
No, that's true.
And I would even take it a step further and say that I'm not sure an advisor can do their job to the fullest extent without seeing your tax situation.
It's difficult to give comprehensive financial planning advice if you don't
understand their largest expense.
You are correct.
Yes, yeah. Listen and subscribe to Money Questions, wherever you get your podcasts.